Hello. Mic test. Hello. So everything looks to be working fine from my end, at least for now. So guys, welcome to our 169th Trading Opportunities webinar. This is Nirav, and before I begin, we'll run down a very quick introduction. For those of you who are joining us for the first time, this is the weekly webinar series called Trading Opportunities. We conduct one every Friday, and only the last Friday we conduct the webinar privately for our members. Others are all public, as you can see here on YouTube live section. So one second. Yeah, so as I was saying, we conduct one every Friday, and the timing is 4:30 p.m. GMT, and you can convert it to whichever time zone you are currently in. We conduct all the discussion live in front of you guys during market hours, and S&P 500, crude oil, gold, Bitcoin, and EURUSD are covered on a weekly basis. In the past 167 webinars, we have captured a total of 418 trades live in front of you guys, and the trade setups which were discussed in the last 168 webinar we will discuss today. So that is the general sequence. Before discussing any chart, I'll first go and check what was being discussed in the last webinar, and only then we'll proceed with the current discussion. So what I'll do is I'll just open the 168th webinar. And lastly, for those of you joining for the first time, you can check our past track record, which beats industry standards, by visiting this page and checking all the sheets. If you have the time, you can check them yourselves, which I do recommend you do. And yes, if you are a complete beginner, we do have a free video course, and I do recommend checking that out. And of course, going through the actual complete length course, which has 1600 plus students. You can check it over here. And those of you who are at an intermediate to advanced stage can check out the book Think with the Markets. There's also a video course based on this book. You'll find the link for that over here. And those of you who have completed the course, obviously, can send the inquiries for the coming batch of training program LT, the July batch. That's all for the introduction. And let's now first very quickly check what was being discussed in the last webinar on the chart of Euro before we head over to the current discussion and take things from there. So here we have the recording from last webinar, which was conducted on 11th of this month. And we want to see what was being discussed on the chart of euro before we begin live discussion in this webinar. So 1 second here. Hello, Joe. So we are looking at the setup. We are assuming that this market is in impulsive progression, and we are assuming that it will go up for the third wave. And the setup is basically very simple. 1.1764 or higher levels will consider long trade opportunities. 1.1764 or higher. So what I'll do is I'll just note that here, and then we'll proceed with the Excel chart. So now let's head over and check what has happened so far on the actual chart of euro now on screen. So on the Excel chart, as you can see, we have not crossed 1.1764, which will be somewhere here, roughly. And hence the long setup has not triggered yet. So far, we are looking at a series of possible nested impulse in play. So we currently do not have any reason to relegate this count. And I'll personally be interested in not assuming bullish possibilities if we see a move below 1.15. So 1.15 you can consider as possible relegation level for the count. And as far as long triggers are considered, I'll just say 1.1774. So this will be the new level we will be interested in longs at this point in time. Long scenario is still the main theme here unless we see a move straight down to 1.15. Another thing we can do is we can take partial entries above 1.17184 or whatever this high is at your end. Keep in mind we are using this data feed. If you are using a different data feed, the prices will vary a little bit. So consider that. Anyways, long story short, it's a wait and watch market with a possible long setup, which we have discussed. And there's really nothing to add here on this. I'll just wait for a few comments. If you don't have any doubts or questions on this discussion, you can just type in understood or clear. And in the meanwhile, I'll just check out the current chat messages we have. Hello, Joe, one of our private Slack group members here. And of course, Ativet, again, our private Slack group members. And Raghu, again, our private Slack group members. Good evening to you, Raghu. Hello, Ativet and Joe. And of course, thank you for the confirmation there, guys. Raghu, Joe, and Ativet. All right, so everybody looks clear on the current discussion. There is nothing much to add, so I'll just quickly shift our focus to next chart of CL. So let's just switch to the recording from past discussion. Here is the discussion on crude oil. Let's see what was being discussed on this chart on the 11th of this month. Let me see. Yes, there it is. So I'll just show you guys that we are expecting corrective structure. So we are expecting a possible diagonal in play, and within the diagonal we are in the wave 4, and within the wave 4 we are expecting one leg down over here. Let's see if something else was discussed. Possibly there is a counter view that I have discussed as H1 minor up for what wave, force wave B of the zigzag. Not really. So that is the main theme here. We are expecting one leg down and possible continuation to the upside. That was the case on crude oil, and I did very much clearly state that this is not the best market right now, and we would be better off focusing on different markets at this point in time. Anyways, that was a view back then. A down, B up, and C down for the wave 4. You can check the whole thing yourselves later on. And without wasting any time, let's head to the actual live chart here on screen now. And it is so far nicely progressing. As expected. So we are currently involved or seeing a possible movement for the wave 4 here. This is what we were discussing in the last webinar, this possible progression. The date was 11th. So the market was somewhere over here. This is a daily chart. So somewhere within this bar we were. And since then the market is kind of propagating occasionally as we expect. So anyways, the long story short, we are expecting a possible diagonal progression. In a diagonal progression, we expect the market to move somewhere along the lines of this structure. One second. Let me just. So this is the rough outlook. 1 up, 2 down, 3 up, and the wave 4 should overlap with wave 1. There should be an overlap here. So we are still to see that overlap here. No, actually we have already seen it. But I still do expect one more leg down for it to look like the expected correction of a zigzag, right? So basically we are expecting A down here, B up here, and C down here. That's the progression for a zigzag. So it does not have to be that huge. It can just be a sharp, small leg down, very fast leg down, taking out this low. Right, so that is the progression we are expecting currently on this counter. A down, B up, and C down. And once this C down is complete, we can then expect wave 5 up. So this is the fourth currently in play. And we are currently in the C of the fourth, this leg. So this is the expected progression on this counter. And again, as I said, I'm not very keen on this market. There are better markets to trade. But the idea is I'm under the impression that it is at a point in time where it will give us some good short trades from a shorter time frame perspective, like a scalp perspective to be precise. So let me just give you an emphasis on the swing view first. Swing view is basically that we'll treat that the wave B is possibly continuing or either complete. If it's continuing, then it can just go up a little bit and then come down for the C. Considering that, we can look for trades from a swing perspective with stop loss somewhere over here. What is this? 73.27, let's say, roughly speaking, and target will be anything below 64.992. So it's a very inverted kind of trade. This is the risk profile. This is your profit profile. So as you can see, it's at least more than twice. I think the risk is more than twice of the possible reward. So it's an inverted profile. Not the best kind of trade. So if you really want to trade it, you will have to keep that in mind and keep the position size small, obviously. Right, that's the swing view. And for those of you who are advanced traders and can see the internals of this wave B structure, you can do your work and look for scalp trades. So one simple idea would be to look for scalps below 65.634 and quick targets below 64.912. So very quick move there is what we can expect. Again, that's just an idea. For the actual scalp, I'll have to look at it more deeply on an intraday level, and that's the kind of thing I'll have to update in my Slack group. It reminds me I haven't even run the bottom text panel. Right, there it is now. Right, so wait and watch market, and we have discussed the expected setup or the possible setup that can play out on this counter. Risk profile is not very good, so only very small position sizes should be played here. And for scalp, just stay aware of the idea. And one more thing, it's a C of a 4, so it is possible that the down leg is very small and fast, and you may not be able to capture the whole thing, to be precise. So if you really are interested in this theme, then do keep in mind that you will have to be on the screen for all this to play out in front of you. Well, that's all for our discussion on WTI's crude oil, and I think I've discussed it in quite detail. But anyways, if you guys have any doubts or questions, just push them in the live chat or just type in understood or something, so that we can then move over to the chart of gold, which will be followed by S&P and BTC. So far, Euro is a wait and watch with bullish bias, and crude oil with a short-term bearish bias. Well, that's good to know, Joe. Thank you for the comment. I don't see any questions here, so I'll just head over to the chart of gold now. And we'll first check the discussion from last webinar. Thank you, Raghu. Joe. All right, so what else is check gold, and then we'll proceed from there. So right now on screen, we do have the discussion from gold from our last public webinar. So we want to see what was being said about this. Yes. So you were expecting possible bearishness on this counter, and the classical setup which I wanted to see, or we were looking or waiting for to play out on this counter, was that this market is going to go up, can go up and test the trend line, this white trend line, and then give us a short setup that would allow us to put a small stop loss and take a really big risk to reward kind of trade on gold chart. That was the main theme. Minor up then down. Let me see if there is something else. Not really. So that's the discussion from our last public webinar. Let's now head over and see the live chart. Right here on screen, we do have the live chart for gold. Let's see how much of what we have discussed has played out. I don't require here anymore. All right, so let's see 11th. Somewhere here the market was, and we were expecting that it will possibly go up and test this trend line again. Hasn't done that, though it has gone up. We haven't gotten the classical setup yet. Expectation is that it could still do that. Doesn't have to exactly touch the trend line or anything. Just going very near to it and then giving a reversal is sign enough that a possible longer or higher time frame reversal may be in play. So we'll completely wait here to watch out for that idea. So the play is very simple. We wait for the market to go and touch on the white trend line or go very near it and give us a sign of reversal. Second idea is, let me just actually mark this first. 1 second. So that's the first idea, that we'll just wait for this market to give us a possible test of the trend line, the white trend line here. I'll just give a rough idea of the price levels, 34.20 to 34.40. Roughly over here, right? And the secondary idea is, in case the wave X has already completed its progression, because it's not a requirement for the market to go and test the trend line, it's just something we want to see. So let's just say if this is the A, this is the B, and somehow the C is complete over here, completing the X of a higher degree, and this market has to go down, then we'll be interested in shorts below 32.93. All right. So those are the two main ideas. Let me know if you guys have any doubts or questions on the chart of gold. And if not, then we'll just play along for or wait for bearish setup to play along. My bias is that one leg up before the leg down, right? But who knows what the market has in mind. And here's the question. If we zoom out to see the diagonal, shouldn't we have a throw over after a failed fifth wave? There isn't a requirement for anything for the market to do. Well, let's just zoom out anyways. Well, if the fifth is complete, we are expecting a correction, and the correction is already in play. If the fifth is here, then we just want a correction, a three-wave correction. Something like this or something like this. Both will be fine. And it's already in play. It's just our hypothesis that if we see a test of the trend line, then we can have a breakdown. It's not an Elliott Wave setup either. It's a classical technical analysis setup from, let's just call it Edward and McGee style technical analysis setup. Technical analysis of stock trends by Edward and McGee. That's the book I'm referring to anyways. So which concept are you asking about, Bharti? Can you be more precise? What do you want me to explain again? As for Joe, okay, I see. Thanks. Just to reiterate our last discussion for Bharti here, what we are saying is that we are expecting the market to go. Let me redraw it. We're expecting the market to go and make a move to the upside, possibly test this trend line within the price zone range of 34.20 to 34.40, and after that we expect the market to fall. That was the concept again. Hopefully that clarifies any doubts, and for anything else you can just get back to me after the webinar. All right. So we'll just move over to our next discussion. Thank you, Raghu, for the clarification. Just get back to me after the webinar. Thank you, Raghu. Thank you, Joe. And let's now head over to our next chart of S&P 500. First of all, let's see what was being discussed in our last webinar on S&P. Let's just see. So 1 second. So we are expecting an upward movement here, and the idea is was very, very simple. We were expecting a wave 2 correction to complete and then a upward flight to take place, and based on that we were long. Let's just see the trade itself. Here is the trade. Expected progression, added swing longs. There it is. So we were long since July the 10th. Added swing longs. Price was 6293, as you can see. Let's just note that. And since then we have added more longs later on. I don't have time to show everything here. Actually, I do have the time, but there's not much point. We booked 60% profits around, let's see where, 6316. And remaining positions were closed as we had trailed the position. So everything was closed in profits, 6300, remaining positions 30% something was closed. So we were able to capture an okay amount of movement here. That was the trade. All of it was posted in Slack live, of course. Let's now discuss the market. So this is basically a plus one. This has worked out as per our analysis. Gold is still a wait and watch, right? And crude oil still is a wait and watch. And euro is again a wait and watch kind of market. I'm requesting, please do not spam the chat section. So here we have the live chart. Let's just go and see what's really happening here. All right. So this was the correction we were expecting. It obviously went a little bit lower than expected. Raised some doubts here, but eventually followed through and gave us this good trendy move, which we were able to capture. And we have booked profits, although the idea is still intact that this market should fly high, go higher than whatever this is, 64.42. That's actually a very low target. The actual targets are coming around 64.500 and so on. But going along with what we have on screen, which will be followed by 6500, 6585, so on and so forth. So with these what do you call, various different levels in play, we still have the bullish idea intact. And why I've closed the trades is I want to place new longs in the coming session. What I'll do is I'll first delete this stuff. So what we do think here is happening is we have a possible nested impulse in play with the current progression. in the wave 3 circle degree of the same. So for those of you new here, we are talking about the impulsive fractal nature of Elliott Wave, in which we are basically stating that we are possibly seeing something like this. Let me just draw here. We have completed possibly 1 up, 2 down, 3 up, 4 down, and 5 up. So 3 is currently in play within this wave 3. If we magnify this structure, we'll again find 5 waves inside of it. So within that structure, we are currently expecting that the first is complete here, second is possibly complete here, and the third will come into play. So this is basically still a long setup. And we personally would like to go longs once we see a move. 1 second. Above 6320, let's just say. So 6320 plus levels, we will look for long consideration. And pretty much everything else is self-explanatory. As far as the invalidation is considered, we will be considering that something else is going on here if we see a move below 6264. So let's just push that as an invalidation level, 6264. So that's the take on S&P 500 long setups, 6320 plus. We will activate longs and we'll consider that something else is going on if we see the market below 60 to 64. And keep in mind, 60 to 64 means we see sustenance below 60 to 64, not a spike like this, at least in this case. Everything else is kind of self-explanatory here. If you have any doubts or questions, you can just push that in the live chat here. Or just type in understood or clear and I'll take your doubts. How complex is this? I'm not understanding it. So you'll have to go through the basics first, Bharti. We do have a course for it. Just check the website. And it's also on the YouTube channel. The playlist is there. And yes, request to you guys who are enjoying the content here so far. If you are enjoying it, do not forget to hit the like button. And of course, share it. Our past webinars have not really crossed the targets of even 500 plus. So kindly do some efforts so that we can continue conducting these webinars publicly as always, as we have been doing it for years. So again, my request for those of you watching it later as a recording, and those of you who are watching it live, do not forget to share it with your friends and colleagues. Thank you, Joe, Raghu, for the clarifications. Can't wait for the wave 3. Isn't that what we all want? Wave 3s. All right, I don't see any more questions here. So let's just head over to our last chart. Which will be the chart of Bitcoin. So here on screen, we have the discussion from last webinar for the instrument Bitcoin. And this was a rather clear discussion as it has been working out really well since our last few discussions. Again, this is a plus one. We were expecting bullish movement and it has already given us bullish momentum. So here is the moment, wave 1 up, 2 down, and expecting third wave in what you call a 1 second impulsive progression for wave 3. Correction down for 4 and then up for 5. The price at the point in time was 117667. Right. So that was the discussion from our last webinar. Let's now head over to the current session and then take things from there. So here is the current expectation which we have right now. First of all, 11th July, the market was here. It has already given us the move up. So that's why I mentioned it as +1. After that, we are expecting possible wave 4 progression. This wave 4 is unclear if it's going to be at that point in time. It was unclear when this level was made. I think it is progressing as a possible zigzag structure and will give a deeper retracement than expected, in which case we can label it something like this. So this is the updated take on BTC. And let me just do it at once and then we'll take things from there. Bharti, please wait for the webinar to get complete and I'll personally take your comments, all right? Because you are asking basic questions which we cannot discuss here. All right, so that's the expected take on the counter for BTC. We are expecting one minor leg down. The setup becomes rather clear here. We are expecting the market to go higher, and in this case, there isn't much of an argument here. We are going to look for long setups once we see the wave be high getting taken out. Keep in mind, we are using Bitstamp data feed. If you are using a different data feed, the prices will vary a little bit. And just to be more clear here, this is the expected progression here. A down, B up to sideways, and then C leg down. That's the whole of it. So expectation is for the market to perform a progression something like this. Pretty self-explanatory here. If you guys have any doubts or questions on this discussion, just let me know in the live chat. And I'll keep updating in Slack group as always. So anyways, that was about it for the whole discussion, guys. Hope you enjoyed it. And of course, do not forget to hit the like and share it as always, so that we can continue doing these webinars publicly. I mean, seriously, keep sharing it if you're liking it. Why not? As far as comments are concerned, Raghu is saying clear. That's good. Joe is saying clear, and possibly NVIDIA flying high and high. As per your analysis, any thoughts? In circle 3 wave is close to complete. Let me just very quickly have a good look. Not very good look. Quick look at NVIDIA. So last update on this was somewhere here. Price was 158 for NVIDIA. And we were expecting upside. It has gone and done that. So there's a +1 for NVIDIA here. Went up as per analysis. Right now, what we are expecting is, let's just update the whole thing here in front of you guys. I'm generally not very keen on covering stocks. I mean, I do cover them mostly privately, but let's just discuss it here as it has been asked already. All right, so here's the take on NVIDIA. We are expecting the bullish progression to continue as long as we are seeing the market to above this CN or bluish trend line. Once we see a break or sustenance below it, we can expect that the wave 4 circle degree correction is in play. All right. So longs can continue holding longs, just push an alert on the trend line. And once this alert is triggered and the market is below it, you can expect possible correction. And as far as my personal take is concerned, this is super bullish kind of market here. So it is possible that we do not see a break of the trend line for quite some time here. One second. Long story short, it is looking like we may have one more up leg remaining. All right, so we can see a test of the trend line of the CN trend line, and then we can see the market heading higher for the wave 5 up. That's our rough take on NVIDIA. Not rough, actually, it's proper analysis on the daily chart here. From a technical perspective, Elliott Wave perspective, and actually this is kind of market where longs can continue holding longs. I'm not suggesting any new longs here. From our short-term analysis perspective, anyways, let me just remove the comment so that you can see the complete analysis. All right, so that's the take on NVIDIA. You can just push in the comments in live chat if you have any. Otherwise, we'll consider the whole webinar complete. Of course, requesting again here that if you are enjoying the content, do not forget to share it so that we can continue receiving the required participation to continue doing these webinars publicly. And hopefully Raghu, Joe, Ativat, Bharti, and everyone else who joined in live or is watching it later on understands the importance of getting the number of views for these webinars and does their part currently. All right, Raghu says he's understood. I'm not seeing any further comments. I'll just wait a few more moments before we close out the webinar. And of course, guys, do not forget to enjoy the weekend. I mean, why would you forget? Thank you, Etivat. Thank you for your wonderful analysis. Thank you for the nice comment, Raghu. All right, guys. With that being said, I think we are now done with this webinar. For those of you stayed till the end and continue sharing my work, thanks a lot to you guys. And those who do not share it, kindly do start sharing it. That's about it for our discussion. Enjoy the weekend, guys, and I'll see you in the next one. You too, Joe. You too. Enjoy the weekend. See you guys in the next one. Take care and bye for now. Have a good weekend, guys. Thanks. Bye. Same to you. Same to you, Ativat. All right, guys. Bye. Take care.